So on to the next program then. So what is the Canada Emergency Business Account? And it says it's interest-free. Are there any considerations a business should be taking when looking into this loan?
So CEBA, as people are calling it, they say it's a $55 billion program. And really the point is to help small businesses. They know there's going to be a shortage in cash. They expect, obviously, the COVID crisis is kind of slowing the entire economy as a whole. So here's a loan, and it's going to be interest free. It's out there to help small businesses with cover normal operating expenses throughout the decline, or when you're going to have reduced periods of revenue. Maybe you've shut down entirely. So here's up to a $40,000 loan, and it's going to be interest free up to the end of December 31st, 2022. So no interest charged during that period. If 75% of it is repaid by December 31st, 2022, 25% will be forgiven. So if you take the full $40,000 loan, you repay $30,000 by the end of 2022, $10,000 will be forgiven by the government. They're government-backed loans. They're all being administered by the banks, by the individual financial institutions. That's how you kind of go through the application process through your bank. And yeah, it's really, if it's needed, it's a really attractive lending option. Like, you never see, well, obviously interest-free loans are not something you're going to stumble across every day. So it's definitely something to take a look at if you need it and it can help you to support those normal everyday operating expenses. You got to pay payroll, you got to pay utilities, you got to pay property taxes on your building if you have one. You've got to pay rent, maybe insurance, fuel, just getting to and from job sites possibly. So
like, a couple things to be aware with this program. It is great, and it is interest-free money will help a lot of people, and then that forgivable portion just makes it even that much more attractive. Keep in mind, this is debt to the government. Essentially, like, if you default on paying back that $30,000, like, the bank will get paid by the government, and then you owe the government, which, like, when it comes to, like, if you have to go bankrupt and or just defaulting on loans, creditor protection, like, I'd almost rather be in debt to the bank than the government, because you can't really shake off that debt as easily. Like, it's basically tax debt. You can't really run from that. So it is, just keep that in mind. Like, I wouldn't take it if you don't plan on being able to, like, if you know you're not going to be in business, I wouldn't take it. That's one of the criteria, is that you're going concern and you intend to be in business.